Welcome back to Vancouver, BC, and the 2007 Resource Investment Conference put on by Cambridge House. Paul Warren here with Al Korelin of AB Korelin and Associates.
You know, here's an interesting question, you guys. You know, when Charles de Gaulle basically told Richard Nixon back in the 70s, I don't want any paper money from you guys, I want gold, and Nixon said, no, you can't have it, and took us off the gold standard and basically started paying de Gaulle in something that he didn't want, which was U.S. dollars. That was a very interesting event, certainly from an economic standpoint. That was a very interesting event to occur. The question that I have is, did Nixon in those days, and from what our economy has evolved into today, is there an alternative? I mean, could we go back from a realistic standpoint?
Well, I think we could. We're not likely to politically until we're forced to, because the adjustment would be so earth-shattering for those that have stolen wealth from the rest of the economy through the fiat currency system. It would require politicians to be honest, if you can imagine that. It would require Americans to understand that they have to pay for things rather than borrow from the rest of the world. So we would have to pay as we go. And that would be an extremely painful process for Americans, for the politicians.
Jay, the question I have is, how long, if in fact the U.S. economy went in that direction, how long would it take to, because I know we'd have to reestablish an awful lot of things, obviously, understatement of the year, but how long would it take to get back to where we are today? If we went on a gold standard,
Well, I think we'd go on a gold standard probably if we're forced to internationally. If the dollar became so weak that nobody around the world wanted it anymore, the Chinese are accumulating gold, the Russians are accumulating gold. I think most of the world except the Western world, the G7 nations, those of us that are close to the United States, are accumulating gold. And some of the European countries and central banks are not selling as they had planned to sell. So I think they understand that in the back of their minds, these guys understand that ultimately this thing is going to self-destruct. When it does self-destruct, then I don't know what shape it will take, if it's going to be a deflationary event probably, and there will be a loss of confidence in paper. And so the only way you can get things back together is to build it on the foundation of gold. It may be a gold-backed currency system to start with. Then I would bet dollars to donuts in 50 years or so they'll destroy it again. The guys that pass the laws and give themselves the freedom to pick other people's pockets. I mean, this is human nature. It's gone on throughout history. Yeah. It's not unique to the United States in this era. I mean, we had the emperors clipped the coins, took a little bit of gold off the coins and put it in their pockets. It's the same thing, a more sophisticated means of thievery by our ruling elite.
That dollars to donuts phrase is funny in this context because the donuts are worth more. if it gets to that point.
Yeah, they would be. Ian, from your perspective, okay, we've got gold right now trading somewhere in the neighborhood of, I haven't looked in the last hour, but somewhere in the neighborhood of what, $630 an ounce or thereabouts. What is going to cause the U.S. economy to implode, so to speak, and hence drive the price of gold to the moon, as a lot of folks at this show believe? What's going to cause that to happen?
Just before I answer that question, I'd just like to go back to this idea of, a return to the gold standard, because I think I work very closely in cycles, not just the 60-year Kondratiev cycle, but another cycle that's, I think, a very important cycle is the 100-year cycle. And 100 years ago, you had the crash of 1907, where a lot of U.S. banks failed. Stock market lost 50% of its value. And as a result of those bank failures, really the Federal Reserve was developed and set up, and it came into being in 1913, but it was as a result of those bank failures in 1907. So I think it would be quite appropriate to see the end of the Federal Reserve system as a result of what I consider to be a monumental economic failure in the United States, brought about by the massive amount of debt that the fiat system has produced. And I think that, this 100-year cycle would probably, if we had that kind of thing, it would probably sound the death knell for the Federal Reserve, because I think people would demand it.
Well, you kind of answered the question in that you brought up the fact that the amount of debt in the United States is absolutely unbelievable. Jay, we started talking with you about this 6 or 7 years ago on the air. I mean, the amount of personal debt is huge. It's not going down. The amount of of debt on the part of the federal government is huge. It's not going down. I mean, you look at it, look at the amount of business debt that's out there. I mean, we are a system today, not of dollars and cents, but we are a system today of Visa and MasterCard. Money has become an electronic medium, okay? And the implications of that, to me, are absolutely terrifying.
Well, they are, and just to put it in some perspective, I think the total debt in the United States to GDP is 325 or 3.25 times. During the early days of the Depression, it was the highest it had ever been before. It was 2.95 or something like that. So we are, and the serious thing is not absolutely the amount of debt. It's the amount of indebtedness relative to the income.
Yeah.
And the important thing is that we're seeing debt is growing exponentially and income is growing in a linear fashion. So how much longer can this go? What I think is going to happen likely is that, and Bernanke has promised us that he's going to print more and more money faster and faster, as much money as he has to print in order to service the debt. And that is going to result, in my view, the potential for a hyperinflation event. And so, we're talking about where gold might go, where the stock market might go. I think you need to look at the gold-Dow ratio and look at it at the bottom of the equity bull markets. And we haven't seen the bottom of the equity bear markets, I should say. At the bottom of equity bear markets over the last 100 years, you've had, I think, 3 or 4 events where you've had a 1-to-1 Dow to gold ratio. So we're looking still at, 1,200, what is the Dow? 1,300 now, where is it? Something 13, like that, 13,000, and a gold price of 630. We're about 20 or so. We've got a long ways to go. So in my way of thinking, whether gold is at 3,000 or 12,000 or 30,000, or someone was predicting a $36,000 Dow, maybe we get to 36,000 on the Dow, but the inflation rate is so horrific that the gold price is 36,000 an ounce. Now I know my friend Ian doesn't agree with that. The point is, I think we're talking about is gold manipulated as the topic of this conversation, and it doesn't really matter. Ultimately, the markets will prevail, and there's going to be that relationship where the equity market is going to be belted really badly, and people are going to come to realize that this paper is a fraud and paper instruments, and they're going to go to the real thing, and that's gold. And the markets are powerful. They'll overcome all manner of efforts to defy them.